All right. Hello, everyone, and welcome. Thanks so much for joining us for this Accredited Investor Virtual Expo. I'm so pleased to introduce our speaker for this session, David Morgan, also known as the Silver Guru, a precious metals analyst and founder of the morganreport.com. To our wonderful viewers, if you could please type any questions that you may have into the live chat box. Time permitting, at the end of David's presentation, I will be announcing questions so that he may answer them. And with all that said, David, thanks so much for speaking today. I can't wait to hear your presentation. If you need anything, I'll be right here. Floor's all yours.
All right, Charlie's Angels. Thank you. All right, this is David Morgan of MoneyReport.com, and I've got a presentation lined up. I plan to go through this in about 20 minutes or so. I've made a fair amount of notes here that I will be looking at, so if you're not looking at the camera, don't be offended. Some critical information relative to where we are in the financial markets right now globally. So this is a pretty basic run. This is from the World Silver Survey of 2021, which was last year. And this is the latest year of full data that we have. The Silver Survey for 2022 will be available from the Silver Institute probably about the May timeframe, so a couple more months. And they will give us similar numbers. I'm going to, again, go through this fairly quickly. So get your questions ready. I'm going to cover silver in this prepared presentation, but I will be touching on oil, energy, food, bank bail-ins, what accredited investors can do that other investors cannot do, and making sure that everyone realizes that in these interesting times, having some physical metal is almost imperative. So, silver supply in 2020, you can see global supply, and this is the top of the curve here, has been flat to slightly down. Of course, the 2020, they'll tell you had to do with COVID, which it did. Some of it did across the board, not just silver, of course. And of course, I think we're all familiar with what's going on in the supply chain without me even mentioning it. So if you look on 2011 to 2021, you can see we really kind of flattened out the global supply, which is roughly 1 billion ounces, by the way. That's what there is. So now taking a look at a longer term outlook for silver going from this survey around the 2020 timeframe out into the future, what you will see is this curve on the left, and it talks about photovoltaics, which we know as solar panels. Now, in this curve, what you see is the PV installations, and you see around 2022, which is the current year, the curve sort of flattens out. Well, as the silver guru, when I put that in quotation marks, I don't take that too seriously. I take the market seriously, and of course, I take the silver market seriously, but I don't take that moniker that seriously. However, that's inaccurate. Now, that probably was accurate at the time of the publication, but it would be a steeper curve up. And the reason is that the ESG, the environmental, social, and government green energy push is huge. And it's huge across the board, meaning globally. And the amount of photovoltaics that these governments think that they want to install is large. In fact, it's so large that it's unachievable. At least it's unachievable in today's world with our known technology. As we get better and better with solar installations, the industry term to make a more productive system with less components or less use of silver is called thrifting. The photovoltaic industry has been thrifting since the first solar panel was developed. And from the last decade, the amount of silver per watt output has been cut in half. So that's a huge savings. So if it took an ounce of silver to produce so many kilowatts, now you can produce the same amount of kilowatts with half an ounce of silver. That's wonderful. But there isn't a lot of room left for that unless there's a technological breakthrough, which I have mentioned in one of my lectures 4, 5, 6 months ago with somebody. I'll give them credit, I can't remember their name, that did a research on using copper and claimed to get some pretty good numbers back using copper instead of silver. That's on hold. I haven't been able to vet it any further. They haven't put out any more press releases, but I just put that out because technology does change things. And so I'm not blind to that fact. But the amount of silver that's used today in solar panels we wouldn't have enough silver to power the United States of America on a residential basis, let alone on a country basis, meaning both industry and residential would take about 5 times the amount of annual silver production, counting recycling. So silver cannot go, the globe cannot go solar at this time. It's impossible. Well, there's wind and there's this and that. I won't get into the green discussion right now. I just want to make it known that, what I know about the silver market and photovoltaics is a big push for it, but it's a limited amount. This is an interesting graph here. It shows how flat the silver investment world has been from roughly the peak of 2011 up until 2020. Now, most of you don't know, I would presume that, excuse me for being presumptuous, but the amount of silver demand for investment in 2020 was a record. It was nothing ever seen like it before in all of the modern data. The amount of silver used in industry is 50% of the market. I just told you a moment ago that the silver market is a 1 billion ounce market per year. So half of that is 500 million. That's the round number, 530, 550, somewhere in that range is all industrial use for silver. Then you've got silverware and you've got silver jewelry, and that leaves a little bit of silver left for investment demand. In 2020, the investment demand for silver was 530 million ounces. It's actually greater than 500 million that was claimed that year as industrial demand. We've never seen that where investment demand was greater than industrial demand. Don't know if we're going to see the 22 survey, which will inclusive of all of 2021, whether that will be true or not. For last year, I think it'll be high. I don't know if it'll be that high. The point being, and you can see it in this graph, is that the silver demand for ETFs has been astronomical. This is just the beginning, in my view, and the reason is that as the world becomes less stable and there's more safe haven status being sought by investors worldwide, that the one market that everyone gravitates to is gold and secondarily silver. And silver's dynamics are much better because it's a smaller market and its usage is across the board. There's so many things as beyond photovoltaics. So if we see a lot of institutional money come into the market, they will go into the ETFs, primarily into the SLV, some spill over to PSLV and others, SIVR and other ETFs. And the question arises, we're so tight in the silver market right now, how much silver is available to put into those funds to back their stock certificates? Because the way these funds are set up and the ETFs are set up is purportedly there is a match between the share certificate and the amount of silver held. Although some question that and through the prospectus, it's true. It's not a guaranteed one-to-one correspondence, but for all practical purposes, most of the silver is there. So I'll leave it at that. So if you're interested in some of the mining aspects, what we're going to find here, and I thought this was an interesting slide to put in for silver nuts, is, where's the silver come from? Again, 2020. So where's the top producer? Well, Fresnillo, and then KGHM in Poland as a close second, really. Glencore, not a big surprise. Newmont, okay. Codelco. So most of those are names, unless you're a mining guy like me, you really wouldn't know. Zinc company here does a lot of silver. Southern Copper, Polymet. Now, so we're down what, 8 or 9, 1, 2, 3, 4, 5, 6, 7, so about 9. You finally get a silver company. So you got to go 9 or 10 deep into this list. And Pan American's mission statement when they started was become the largest primary silver producer in the world. And I think they've earned that. You could argue Fresnillo, but primary silver producer, I'd go ahead and give it to Pan American. Hecla's behind them, Vitaventura, Industrias Penoles. You got BHP way down here, which is a conglomerate, as most of you know. First Majestic, Yamana, Tech, and Hochschild. So When you look at that, what you're finding is a lot of the big silver producers are not primary silver companies. A silver mining company is a very, very rare thing. Most silver comes as a byproduct, which 70% of the silver production comes as a result of lead, zinc, and copper mining. 12 to 13% of the world's silver supply is a result of gold mining. Only about 25% at the most of the silver comes from primary silver mines. And I said Hecla's a silver mine, but it depends on the price of gold and silver. It's about a 50-50 split. So some annual reports, Hecla's a gold company because most of the revenue comes from mining gold. And in other years where silver's outperformed gold or whatever, you would find that it's a silver company because more than the majority of its production in silver was the main source of revenue. So continuing, global mine production we already covered. So recycling, been flat. This is an area for great expansion. And for those that are subscribers and non-subscribers, I mean, subscribers to the free report, let alone the paid service, you know that I am involved with Envirometal, Environetal. You can look it up. It is a penny stock. It is a Canadian company, but it has a solution to pollution. They are able to extract precious metals from printed circuit boards with basically no environmental impact. And this is huge. So you can do it with printed circuit boards. You can also do it in the mining region, which we're testing now. I'm on a board of directors of a company called Group 11, where we're testing the in situ method using EnviroLeach's technology or Envirometal's technology. This changed their name from EnviroLeach to Envirometal. So one question I got about why, didn't silver just go cuckoo crazy, which it did do a nice job. I mean, if you look at the chart, it took 8 years. It finally broke out above 18, 19, and soared up to almost 30 and then backed off and tapered off the end of last year. Now we're seeing some movement in the silver market again. But the reason there was a lot of silver that came to the market to kind of keep the price tamped down was that silver in India was at an all-time record high in rupees. And the words that the bankers like to use, I don't, but I'll use their words, they just hoarded a lot of silver. So normally India is a huge silver importer, not a exporter, and that wasn't true going back a year or so. So moving on here. Industrial demand, as I've said so many times, 500 million ounces a year. It's kind of flat. You can see that. It kind of goes, it's at least that level. Is it going to increase? Yes. Why? Because of photovoltaics push, the green push, the electronics push, the electrifying of everything push, the batteries. So there's a lot of reasons why this is going to continue up. I did an interview on my mastermind series with Matt Watson. He just did an interview with Charlotte McLeod of Investment News Service, INN. You might look it up. And when I had him on the mastermind, he claimed that his work indicated that the amount of silver used for industry by 2030, which is like 8 years away, was 85% of the market. So there is what I call a natural corner happening in the silver market. There continues to be an increase in demand from the industrial side. So green energy, I think we talked about it. This is photovoltaics. I throw this out. I would have a different graph. This is from their study. I can't alter it. I know from talking to Matt recently that the number right now is at 140 million, which is off this chart. It's up here somewhere. That's for 2022 projected. So it was flat, as this shows, and it's making a big leap up now, and probably that will continue. Emerging uses, I'll pass on that. Silverware, just throwing it out there. It's still part of the market. And, you can see from the colors here, that who buys silverware? India. I mean, really, that's it. I mean, the gray is others, whatever that means. See, Italy's got a little bit and China's got a little bit. They don't even put US in there. But it is in India, silverware is considered, is used. Or consumed. So I've talked about this many times. I'm going to bust through this pretty quick. Silver has a propensity to, what I've coined the phrase, scare you out or wear you out. It can make huge moves up and down or spikes up and down and scare you if you're long, and it goes way down quickly. It can scare you. And it can also wear you out because it just goes aimlessly sideways for a very long time and doesn't make a move, and you just get tired of it and wears you out and say, forget it. So that's really the reason why you have to be a savvy investor and realize there's a right amount of any investment. And it varies individual to individual. But if you buy it for the purposes that I've outlined, then the right amount is probably like 10%. In most cases, that's a rule of thumb. It's no guarantee, but it gives you the idea. But this is about what happened in the 1980 time frame, and that the biggest part of the move came in the last period of time. And whether this will repeat or not remains to be determined, but you're seeing it play out right now in the nickel market. You've seen it play out in the palladium market, and there's no reason to not think that it could play out again in the silver market. So 90% of the move came in the last 10% of the time. If you look at the bull market the way I do, and you don't have to, these are my numbers, you can poke holes in them or not. We went off the silver standard more or less in 1965. All dimes and quarters were 90% silver halves. They weren't minting them, but dimes and quarters through 1964 inclusive were 90% silver. So 1965 on, they were not. So silver's monetary price is $1.29 per ounce, using that basis as money. And I just put $1.30. It's just a round number, and it went to round number $50 in that 15-year time frame. So it was a move of $48. 42 of those dollars came in the last 13 months of a 180-month move. So that's 7% of the time. And the amount of dollar increase was about 87.5%. So my adage that 90% of the move came in the last 10% of the time. You want to use my arithmetic, it was 87.5% of the move came in the last 7% of the time. It's not a lock as far as 90 and 10, it's an idea. The idea is that all markets get parabolic at the end, they get frothy. It happened in the tech wreck, it happened in the Japanese stock market, it happened in the real estate market. It's happened in almost every market. So I would expect, again, it's quite possible it could happen again in the metals market. So it started in 1979. Silver started in 1979 at $6 an ounce, and a year later it was at 50. So that's 800% in 1 year. So silver can make you rich in a hurry. It doesn't happen often. It's one of those type of situations, as I said, could scare you out or wear you out. I don't invest in silver for that kind of a situation, although I'll be well aware of it if it takes place. I did call the top at 780. I called the top at 21. I called the top at 50. Every top that silver's made so far in this renewed bull market, I've called it. Whether or not I call it in the next one, I don't know. And the other option with calling the top, let's say I do get it right, is will you at that time want to trade physical silver into paper money? And the answer is I don't know. But I'll be with you for the ride, and I will give you the best of my thinking along with my staff. So there's my newsletter. And I know we've got, as I said, I'd try about 20 minutes, a little ahead of schedule on that. I do have a YouTube presence. You can just go to YouTube, probably type in the Morgan Report. I think you'll find it. Twitter, I'm pretty active. I've got a couple of people that have my account, so everything that's posted on there is not necessarily me, but I'd say 70, 80% of it does come from me. And I do try to post things that are once in a while funny, but mostly serious about the economy, gold and silver, generally things that affect the investment world, and why I put up there because I feel it's important. So I could go ahead and escape out of that. You can see my desktop there. And are there any questions that have come in yet?
Yeah, so we've got a couple of questions so far, and I'm sure that now we're opening up this live Q&A. We'll get a couple more rolling in.
Okay.
First one from Nima is asking what portion of one's physical precious metals holdings should be allocated to platinum?
That's a great question. I don't know the answer because, as I said, one size doesn't fit all. I was quite bullish on the palladium market, not the platinum market. We did a white paper for our paid subscribers. I said, let's go to platinum, excuse me, to palladium. And we held it not long enough. I did hold some personally. And I made a swap for palladium to silver when palladium was around 26, 2,700 and silver was at 18. So far, that's a pretty good swap because silver is 25 today. I haven't looked either. Platinum is something that I've studied quite a bit. I probably know a little more about platinum than some of the other writers. I got this piece I'm looking at again. I got some more behind me. After you have enough gold and silver, you can buy platinum. Platinum should gain some traction, but I don't think it's going to be for a while still. Reason being is that palladium is what is used by all the auto manufacturers. Most of it comes out of Russia. It's a very tight market. It's the only metal that's trading as if it's a true supply demand. Platinum still has enough overhang and it's very small, but it's not much of an investment metal. It is, but not many people invest in it. So platinum is going to depend more on the hydrogen economy than it is going to be on the internal combustion engine economy. So if you're willing to have some patience, I think platinum's a pretty good buy here, but I don't expect to see much happen. Now, that's part of the answer. The other part is what happens when there is a further currency destruction and people are fleeing the dollar and all the things that look like they're lined up right now. Then probably any precious metal will fly. So I'd be a little careful. I own it. I like platinum. I don't have a lot of it. Palladium, I'm basically out of. But between the two, I think platinum is a better buy, but I think you're going to see palladium outperform platinum for a while.
Thank you, David. And another question we have from Barry that just came in. Based on the gold and silver ratio, when would be the best time to convert silver to gold? And then they say, what ratio?
Yeah, that's tough. There's some rules of thumb that you can use. What we know from this new bull market that started around the year 2000 is when silver hit 50, we had a gold silver ratio of about 33. So I would say anytime you're above 80, you'd probably want to move your gold into silver, or at least part of it for that swap. And then when it gets under 40, I would swap back. So you're doubling your money or your metals position by doing that alone, because obviously when the ratio goes from 80 to 40, silver's outperformed gold on a 2-to-1 basis. I think that's very reasonable. Will silver get to a 20-to-1 ratio? I think it will, which would be fourfold, but I wouldn't do a swap there or wait for that. You could. And on the swap thing, what I usually teach is, not to go all in or all out, to use tranches. So let's say you've got I don't know, let's make up a number, $50,000 portfolio in metals. Maybe allocate 30,000 to swaps and leave the rest alone, that type of thing.
Another question we have coming from another David is, do you expect any temporary drop in the silver spot price once the Ukraine war is eased up?
Oh, yes, I think it will. It's very political. The safe haven status wears off, and the silver and gold market are derivatives markets. I mean, you really don't use the COMEX as the place to buy and sell physical metal. Yeah, some metal does go in and out of the exchange, certainly, but primarily it's a big, huge paper market. And the derivatives market is across the board of all the crops. Same could be said about wheat or soybean oil or cotton or cocoa. So these are derivatives markets. So the derivatives market will back off. Now, will that mean that there's less demand for silver? And the answer is probably not. In fact, it could decrease. But yes, since the tail wags the dog in the commodity sector, I do expect that any relief in the quote unquote war scenario will drop the price.
All right. And we do have another question come in from Nima asking what your opinion is on Is it Gatos or Gatos Silver, given their resource estimate mistake?
Yeah, well, full disclosure, I own it. Given their what resource mistake?
They said that there was
Yeah, they did. They messed up. Yeah,
yeah,
I owned
resource
it,
estimate mistake.
yeah, I owned it and I wrote about it. I honestly can't remember exactly what I wrote, but when in doubt, stay out is my motto. So whenever something appears like that, if it's a lawsuit or a misstatement of fact, or they had to redo their books or whatever, I usually just get out and wait. Doesn't mean it's the end of the world. I remember reading about it, liking it, and I can't recall. I was going to say I own it, but I don't think I do. I think I was contemplating it, and then that report came out that I believe they're referring to. I just decided to wait. Sometimes, if you know what you're doing, and in this case, I don't know that company well enough to speak. I would, if I was convinced myself that the numbers lined up, I might take it because no one's seen what I'm seeing, and that does happen. But I didn't really have a comment on it. Sorry.
All right, then. It looks like that's all the questions we have coming in so far. I'm not sure if maybe we'll have a couple more going in if you want to go over anything to do with the Morgan report, show people around the site.
You bet. So I'm on the landing page, the Morgan report, and of course you can read this. Most of you probably have. And good thing to get is your first name and email. This is my free report, and I write. You'll get 2 or 3 things a week. Very little advertising. Once in a while, very seldom. And then the main feature here for free is the blog feature. And this is where I do a lot of interviews. I post them all for everyone. It's a benefit. I've done a huge series, 20 episodes of the crypto conspiracy. I've gone into kind of the dark side of the cryptos, what to be cautious of. Most people are just looking at the upside, and I'm being a little bit cautious about them. So the blog is one place. From this blog, we've got these icons here. That's our YouTube channel, our Twitter channel, my LinkedIn presence. Facebook, I really don't have. I think it's just a corporate page. There's no friends or anything like that. I think it just has a display or a link back. Twitter, you can see I'm pretty active on it. This is someone posted that for me, which is fine. Like I said, I have a couple of people that, and here's something interesting on the nickel futures. I just got this from one of our members and said, what do I think about nickel being at 22,000, which is right here, and then going parabolic, and silver is at 22, and it's starting to move like that? The answer is I don't know. Silver can do that. There's no doubt about it. Will it do it right now? I don't think so. When you're looking at nickel, you're looking at an extremely small market. But there's a lot there. So let me come back, if I can, to here. There are some features here. This OwnX is a savings program. It's not for accredited investors. Before I forget my notes. So for accredited investors, let me go here real quick and do a bit of a sales pitch here. So on the subscribe feature, this is the paid report. We have the premium service, and this video talks about it. There's some written words about the model portfolio. When I trade, you get to see what I'm doing. I explain it by video. We do have a text service for everybody that goes out to your email and your text. If you want us to, you have to give us your phone number, obviously, our research. New discoveries, we're not always first on everything, but we have been first in the rare earth elements, first on cobalt. We've been first on quite a few things. And then you get to ask me questions on 1 per month basis, unless you're a mastermind, which is what I'm getting to. Because on the mastermind membership, what you get is a monthly, you get everything in the premium service, but you also get a mastermind series, which is once a month is all. But a lot of them, not a lot, but a fair amount of them are for accredited investors. And these are private placement opportunities where we have 99% of the time, the CEO themselves explain the opportunity with a slide deck, pitch deck, as it can be called, and go over the opportunity. Most of those are successful, but not all. You have to be smart and use money management, but that's one of the main features of the mastermind membership. That is $2,500 a year. Most of my competition is around 75 to 10,000 a year for the same service, but they are more apt to give you more opportunities than I do. And the reason I don't give you very many is because some just don't have enough merit to my way of thinking. Going back to environmental, I believe that we did that private placement at 25 cents. Got as high as almost $2. We took some profits. Well, I wish I'd taken more. And now it just did another raise at about the same price. So it's done a round trip all the way up and all the way down. So it tells you how some of these situations can go. But it is an AI conference and we're almost out of time. Is there any more questions?
It looks like that was it for now, David, but thank you so much for giving us that little rundown on everything on the Morgan report.
All right, if I got just another 30 seconds, other areas to invest would be oil and food. For our paid members, I put out ADM was a good hedge against increasing food prices. I think that stock has doubled. So I don't know if your food bill has doubled or not, but that stock has. So it's pretty much been a pretty good hedge for food. And then I wanted to talk a bit about bail-ins, and I'm running out of time or ran out of time. So if you're interested, type in bail-ins, David Morgan, and you should get the video up. It's got 1.6 million views, and it's really important to understand what the next financial crisis could bring to those that have accounts in the United States.
All right, David, thank you so much. And wonderful people, that does conclude our time for this session. I want to give another huge thank you to all of you for joining us today. And again, to you, David, for that brilliant presentation. Be sure to stay tuned, everyone, as we do have a lot more in store for you today. I hope everyone has a great day.